Intel just reported its earnings with the stock initially jumping straight up to then slowly selling off, so is it time to buy more of Intel? We've also gotten more information about Richtech Robotics timeline for the Ghost Kitchens, and ASTS is reporting earnings in the next week. But first, Intel reported Q3 earnings, and I'm not going to go too much into details, just point out what I thought was important. The company missed on earnings mainly due to impairment and restructuring charges, which don't really paint an accurate picture of the company's potential performance in the future. Some good news is that they are making significant progress on plan to deliver $10 billion in cost reductions in 2025, and Intel and AWS are finalizing a multi-year, multi-billion-dollar commitment to expand the company's existing partnership to include a new custom Xeon 6 chip for AWS on Intel 3 and a new AI Fabric chip for AWS on Intel 18A. Intel also launched the new Intel Core Ultra 200S processors, which are honestly behind the AMD's processors and even Intel's previous generation processors in almost every single category except for AI computer vision and pricing. So yeah, while Intel is behind AMD in most categories, Intel continues to lead the AI PC category and is on track to ship more than 100 million AI PCs by the end of 2025. The main idea behind my investment in Intel is that the market is underestimating the company's potential in 2 to 3 years while putting too much importance on the company's current state and products. Because I'm essentially betting that Intel can get back to the top of CPUs with the 18A process. So moving forward, I'm not planning on selling a single share, and if the stock continues falling, I'll just add more. Now onto Richtech Robotics. As I've said in my last video, I think this company has great potential, and the main reason why I bought into it was because of their plan to run restaurants. And luckily we've gotten a bit more information about the timeline of their plan as well as their general plan moving forward. Firstly, they have updated their investor presentation, with the most interesting part of it being the shift to the robot as a service model. And as I anticipated in the last video, the revenue from the service and leasing of the robots has already overtaken the sales of the robots. I expect this source of revenue to continue outperform all other sources of revenue until the revenue from the 20 Ghost Kitchens starts coming in. Based on the binding letter of intent between the Ghost Kitchens America and Richtech Robotics, the execution of all agreements must be completed no later than June 30th, 2025, meaning that we should start seeing revenue from this side of the business at the latest between mid-2025 and end of 2025. But before we see that revenue, Richtech Robotics has to pay a one-time franchisee fee and money for construction and other expenses. This amount is blurred out, but ChatGPT estimated the franchisee fee to be around $30,000 per location, and Richtech would have to pay around $200,000 for construction. Although I think this latter amount should be way lower since the actual locations are already built. Anyway, this would bring the total cost for all 20 locations to $4.6 million. Given that Richtech Robotics currently has $9.2 million in cash and burned $2.4 million in the first half of 2024, we can estimate their cash balance by the time these locations start generating revenue. Assuming the same burn rate, the company would have $4.4 million left by mid-2025 and $2 million by the end of 2025, meaning that they need more funding. Luckily, the company has already secured a way of getting that funding, but it comes at a huge cost. On February 15th, 2024, the company entered into a standby equity purchase agreement with YAIIPN. This agreement essentially allows Richtech to raise up to $50 million by selling its stock to this investor, meaning that shares get diluted. This investor can get a maximum ownership of 20%, which would at the current market cap mean that Richtech can get a maximum of about $12 million. This amount would cover all the costs needed for the Ghost Kitchens, but it comes at an obvious cost of dilution. And yet, once the Ghost Kitchens start operating, Richtech expects to generate between $14 million and $40 million of revenue a year. The company also received a notice for the Nasdaq delisting, meaning that the 180-day grace period started, with a possible extension for another 180 days. Because of these facts, I decided to hold on to my shares until the end of 2025, or in other words, until we start seeing the revenue from the Ghost Ghost Kitchens. Once that happens, I'll reassess and either sell out or buy more. The next stock I want to quickly cover is Luminar Technologies. The company is reporting its earnings on November the 11th, and I honestly don't expect them to beat estimates due to delays with the Volvo EX90. However, it looks like the car is finally available in the US for demo test drives, which is a good sign. I plan on holding my shares until at least this earnings, and then I'll decide whether I want to hold until Q4 or sell and buy Richtech Robotics. Meanwhile, ASTS has successfully completed unfolding of first 5 commercial satellites in low Earth orbit. With this significant post-launch technical activity now complete, ahead of schedule at 6 weeks after the launch of the satellites, the Bluebirds are now preparing for commercial and US government operations. On top of that, they announced that they'll provide quarterly business update on November the 14th, 2024. My plan for this stock hasn't changed and will likely never change, as I plan on holding my shares for a very long time. Having said all that, this is purely for entertainment purposes, as I'm not a financial advisor, and if you want to see more of my content, click on the video just popped up. If you like my content, make sure to subscribe, and thanks for watching.